just to kick it off. So this is for your Bitcoin. Primarily, if you have a large allocation, somewhere north of 10 Bitcoin, we're going to talk about just the different professional services that you might want to look at that exist today that you might not know about, ways to be able to leverage your Bitcoin or your other digital assets inside insurance policies, institutional custody, ways to generate cash returns on those. And Jason's got a very unique product that he's joining us to be able to discuss today. He works for Meanwhile. We were able to meet at XRP Vegas. Well, it was Bitcoin 2025 there in Vegas and then XRP Vegas. So I'll let you give a little background on yourself and the firm, and then maybe we can get into the product.
Sure. Thanks. It's great to be here. Thanks for having me, Jake. So I've been in the crypto space since 2013 when I first discovered Bitcoin. I was a global macro trader on Wall Street until I discovered Bitcoin, started telling everyone that was willing to listen. This Bitcoin thing is very interesting. It's a new asset class. Everyone thought I was crazy. Ended up leaving traditional Wall Street to launch my own crypto fund in 2014 in New York, where we actively managed a portfolio of digital currencies. My career progressed. I joined Credit Suisse as all the big banks started to build out blockchain and digital asset adoption strategies. So I launched the blockchain team for Credit Suisse in 2016. I was with the bank until 2020. And if you recall those specific years, 16 to 20, in crypto land, especially 2017, it got very interesting. 2017, Bitcoin started the year at 1,000, ended the year at 20,000. Subsequently, in 2018, the ICO bubble popped. Bitcoin crashed back down to 3,000 and sort of sputtered around for the next couple of years. But one important thing happened in that period of time. It became a very popular topic of conversation on Wall Street. And being at a bank, everyone was wondering, what is this Bitcoin thing and does it work in my portfolio and should it be in my portfolio? And being a global Swiss bank, we had a lot of ultra high net worth and family office clients that started to reach out to their wealth managers. And their wealth managers were starting to field questions around, things like, I have 25 million in assets with you at the bank. I'd like to explore crypto allocation. Which coins should it be? Bitcoin, ETH, Ripple, what else? What weights, what ratios? Where do you buy crypto? Who are the best counterparties? How do you underwrite and do your due diligence on a counterparty? How do you lower your cost profile and lower your fees? And once you finally acquire crypto in the right weights, what do you do with it in terms of custody? Do you self-custody? Do you third-party custody? Is there insurance for custody, for theft, for counterparty risk? What happens if you die? How does it go to your family? What about the tax implications? How can we make this tax efficient? How can we plan for our estate? These are generally family offices and different trusts that I'm talking about. And in 2018 and 2019, those types of clients called their wealth managers at Credit Suisse and probably every bank around the world, but all I knew was Credit Suisse. And they didn't know what to do, these wealth managers. They were like, stodgy old bankers from Switzerland or all around the world, and fielding these questions. All they knew that they could do was say, you know what, I can't answer these questions, but we have a blockchain team in New York. Why don't I set up a call with Jason and his team? Maybe he can help you. And in 2018 and 2019, I got 70 to 80 conference calls set up by colleagues I'd never met, these wealth managers around the world at the private bank. And with these types of clients, these are wealthy, financially successful, smart, savvy, generally baby boomers, not tech savvy clients of the bank, but had a lot of money and were investing from a generational perspective.
Right.
And these were the questions, those same exact questions I just went through. I got asked those 70 times. And I knew the answers, given my pedigree and my background. It's acquiring and custodying crypto. It's not that hard, but you kind of have to know what you're doing. You don't want to make a mistake because it's a digital bearer instrument with no recourse. So, but I was quickly told, because these were recorded Credit Suisse lines, by the chairman of the board of Credit Suisse himself, that we do not give out crypto investment advice, that we're going to follow the Jamie Dimon mantra in 2018 and 2019 of Bitcoin bad, blockchain good. We're a tech play. You are blockchain. You sit next to AI and machine learning, robotics and big data and cloud, but we don't tell people where and how to hold Bitcoin and ETH and Ripple. And which was kind of, annoying, but I was told you take the call anyway. These are very important clients of the bank. Just, you have to have your both hands tied behind your back when you took this call. Wow. By call number 50 or so, I realized that there was an opportunity here, that these people needed professional accountability to help them get into the crypto space, that they needed someone to guide them, that asking their grandkids, which by the way, anecdotally was told to me several times, they would ask their grandkids, these are baby boomers, because who are tech savvy. help me get into crypto. But when it got time to wire exchange, whatever exchange it was, $2 million, $5 million, and grandpa said to grandson, are you sure this is the correct way to do this and we should be wiring this money to them? And grandson said, I'm pretty sure. Not, yes, I'm 100% certain this is how you do it. Grandpa realized I can't. What's the worst case that happens? I send money to a black hole or get scammed, and it's still my grandson. I can't fire him. So you needed the professional accountability, and there was no one that was willing to help them. So I decided to leave Credit Suisse in January 2020 to start my own consulting, high net worth concierge, white glove concierge, geared towards that type of demographic to help them acquire and custody crypto assets, to basically move money from traditional capital markets into the crypto space safely and securely. And this was right as COVID lockdown quarantine began. Obviously, the global economic response to the pandemic was good for risk assets, money printing, stimulus checks, all risk assets caught a bit, especially Bitcoin. MicroStrategy later in 2020 started to buy Bitcoin, then Tesla, then, everyone. And Bitcoin was the flavor of the day, not just Bitcoin, all crypto assets. And I grew my business. I had a lot of clients already that needed help. Everyone in my network, Wall Street people, they wanted help, and the markets helped. And these guys taking a risk to get into crypto for the first time, to buy it, and then the next day have it more often than not in 2020, 2021 be up 5%, 6%. Pretty gratifying. That immediate gratification helped the business. Ultimately, grew that business, sold it to a crypto fund called Hashnote. Hashnote was a spinoff of Cumberland and DRW. Hashnote was basically developing an on-chain version of what I built. They were doing on-chain private wealth, or they wanted to. I had created essentially off-chain, just an old school like private wealth business to help high net worths allocate into crypto. And what Hashnote also had was yield on your Bitcoin, on your ETH, and on your other assets through different options vaults. And so people wanted yield. They were sitting on crypto, price was going up and down, but they knew that, they had a long-term mindset, and ultimately brought a lot of clients over, launched private wealth for Hashnote in 2023. I was with the firm to 2023, 2024. And then in January this year, I don't know if you saw, Hashnote was sold to Circle, acquired by Circle. And it was last year, actually, while I was still at Hashnote, that I discovered Meanwhile. I discovered Bitcoin-denominated whole life insurance, which at first I didn't know exactly what it meant. And then it was explained to me and it blew my mind. Being a low-cost basis Bitcoiner, 2013 cost basis. I have a wife and 2 kids, so I have a family. Legacy, estate planning, wealth, life insurance was kind of on my mind. I have term life, but Bitcoin whole life and any other life insurance are actually not mutually exclusive. It's almost a complement. It's more like a tax wrapper for your Bitcoin than it is a life insurance policy, so to speak. And I'll tell you exactly how it works. Essentially, I discovered the policy last year, got my own after Hashnote was sold to Circle. I reached out to the Meanwhile team. I said, guys, this is the most interesting product I've ever come across in my 12 years in crypto. How do you not have 50,000 clients already? And the CEO was like, I don't know, why don't you come help us grow? We'll make up a title for you, call you a head of business development. You'll be in charge of partnership and distribution and sales and strategy, and come join the mothership. And I did. And it's an amazing product. And it's basically, it's all Bitcoin. So I love other coins too, but this is Bitcoin only, because for this company to work, we have to take a 50 to 100 year time horizon life insurance. You're underwriting people's life, and when they die in the future, you have to pay out a death benefit. And the odds that Bitcoin will be around in 100 years relative to every other of the 17 million different cryptocurrencies that exist, Bitcoin has by far the highest odds in terms of durability, longevity, staying power. So the company is denominated fully and entirely in Bitcoin. So you pay your premiums in Bitcoin, your death benefits in Bitcoin. And one of the beautiful things about whole life insurance is that you can get policy loans that are completely tax-free, meaning you borrow Bitcoin out of your policy, sell it, you get a new cost basis, and you never have to pay a dime in capital gains or income tax on your Bitcoin ever again. So the policy is pretty amazing. And Jake, you want me to sort of just explain it a little bit further, how the policy works?
I think this is super interesting because I don't think, to your point, most people don't even know that this exists. So I had a gentleman approach me at the end of last year with a tactic, and I actually just made an introduction to another gentleman to you that wants to, play the cycle, right? They want to sell pretty soon here. They think maybe Bitcoin goes a little bit higher, but they want to take profits. And this would be a fantastic way to do that with a new cost basis, sit on that cash and then buy the dip as we go through the next cycle, ride it back up and be able to repay that loan in Bitcoin because it's denominated in Bitcoin.
Love it. And this is a great way to do it. So essentially, let me give an example on traditional whole life to sort of bring it back and allow everyone to really understand what we're talking about. So with traditional life insurance, you go to like a Mass Mutual, let's say, and you ask for coverage. You say, I'd like $1 million in death benefit coverage in whole life. And they'll say, great, Jason, we need to crunch some numbers based on your age, your health, your sex, your smoking status, and we'll give you an amount of premium that you're going to have to pay either each month or each year. And in that premium will be baked in fees and expenses. You'll pay that premium and it'll go into essentially a mutual fund or an index fund that'll track the market in a very diversified, slow growing way. And they'll give you a guaranteed growth rate of 4% a year, every year, regardless of what that market actually does. It's diversified enough so you'll get 4%. Truth is that the insurance company is going to try to make 7% and they'll capture the 300 basis points. So, but you're going to get a 4% growth, and that growth is tax-free, meaning, let's say a couple decades into the future, your portfolio is up 35%. You can get a policy loan, meaning you could borrow money out of your policy. You don't have to wait till you're 60 like with a Roth. You can go into your policy and say, I need a loan. I had $1 million in coverage. I'd like to borrow 100K if the account has reached that 100K threshold of policy loan status. You could borrow 100K out and it's up 35%, but you don't have to pay 35% capital gains tax appreciation. You don't have to pay any tax. You get the cash and you never have to repay the loan. You're never at risk for margin call in case the market crashes. Your new death benefit, because you borrowed 100K, is now 900K. You're going to pay 7% or 6% in carry costs and interest on that loan. It also gets netted out of the death benefit as well. So you now have 100K. You could do whatever you want. You never have to repay down payment on a house, whatever it is. Or it's great. It's an investment account whole life. That's the difference between whole life and term life. Term life has no investment account. You can't borrow money. You die, your spouse gets paid out. If you don't die in a period of time, there's no cash value and nothing happens. And so you get this tax-free loan, this tax-free growth. It's pretty great. And high net worth and family offices, they love life insurance for that reason. Now, take everything I just said in this example and put Bitcoin in it. Instead of dollars in a mutual fund, you're going to pay your premiums in Bitcoin, and it's going to go into a Bitcoin-only account that, meanwhile, the life insurance carrier, and we're domiciled in Bermuda like every other life insurance and reinsurance company for good reason. They're one of the most respected, strict, onerous regulators of life insurance in the world. They have very high capital reserve ratio requirements that we have to maintain on our balance sheet at all times. All of our investments have to be reviewed by the Bermuda Monetary Authority, where we have that's our regulator, and we have our licenses. So the Bitcoin's going to grow. 2% a year is the growth rate that we give you in Bitcoin terms, not in dollar terms. So as an example, a 35-year-old healthy non-smoking male who wants to pay 10 Bitcoin in premium gets about 18 Bitcoin in death benefit face amount. So 10 Bitcoin is going to become 18. All you have to do is put 10 Bitcoin in. The way it works is you do it over 10 years. So you're going to pay 1 Bitcoin a year for 10 years in this example, and your death benefit is 18 Bitcoin. It's a guaranteed fixed 18 Bitcoin, regardless of the price of Bitcoin in dollar terms. We don't think in Bitcoin in dollars. We only think in Bitcoin. We are literally on the Bitcoin standard. And actually, we just released our audited financials about a week ago. The first company ever to release audited financials fully denominated in Bitcoin, meaning a table of assets and liabilities with B's in front of each number instead of dollar signs.
Yeah.
Pretty monumental milestone for the Bitcoin nerds out there. So in order for us to create this tax-free growth, tax-free loans, everything in Bitcoin, we are never going to dollarize your assets, your Bitcoin. And so, as I was saying earlier, you pay your premiums in Bitcoin, your death benefits in Bitcoin. So 10, in the example, 10 Bitcoin in premiums, it's always paid over 10 years. 18 is the death benefit. And then comes the beautiful part, which is the policy loans. So let's say in this example that Bitcoin goes to $1 million one day. You have two options when you own Bitcoin. You can sell Bitcoin at $1 million, get the cash, pay a huge capital gains appreciation. Or if you have a policy with Meanwhile, you go to Meanwhile and you say, I'd like to originate a policy loan. Similar to earlier when I said that 35% appreciation on the Mass Mutual, you get it tax-free. Well, the way you get Bitcoin tax-free in a policy loan is you go to Meanwhile, say, I'd like to borrow Bitcoin. You say, great, you can borrow up to 90% of the surrender value of your policy. So it's like a 90% LTV loan. And you might say, okay, I'd like to borrow 2 Bitcoin. You say, great, what wallet would you like us to send the Bitcoin to? We have to KYC AML verify that wallet, make sure it's clean. You're not sending to North Korea or anything like that. And we send you the Bitcoin to that wallet, 2 Bitcoin. And Meanwhile is done. That's all Meanwhile does. We do not dollarize. You're not borrowing dollars. You're borrowing Bitcoin. Then it's on you to go sell the Bitcoin. I presume that's what you're going to do. You're going to sell the Bitcoin. You want cash. You want to buy a house or whatever it is. So you go to Coinbase as an example, or Kraken, doesn't matter. And you go look to sell at $1 million a coin. And Coinbase says, hold on, before you sell, we need to do some work on our end. Where'd this Bitcoin come from and what's the cost basis? Now, you know that you originally bought your Bitcoin at $1,000 many years ago. You're an early Bitcoiner.
Right.
But you're not selling that $1,000 Bitcoin. You're selling new Bitcoin out of a life insurance policy at a new cost basis. So you're going to show Coinbase or whoever a document that comes with your loan that says, I got my Bitcoin from a regulated life insurance policy. And it says right here, the cost basis is $1 million a coin. The cost basis is always established on the day you originate the loan. And in this case, $1 million. So then you go limit order, sell $1 million. Coinbase says, great. Cost base $1 million, sale price $1 million, no 1099, no taxes. You keep all $2 million in cash in your bank account. You never have to repay the loan. Your new death benefit, because you borrowed 2, is 18 minus 2, 16 Bitcoin. You're still long Bitcoin. You still have your original 10 Bitcoin. Instead of an extra 8, now you have an extra 6 because you borrowed 2 out of the death benefit. And so what have you just accomplished? You are selling Bitcoin at a much higher price, paying 0 in taxes. And you could do this in perpetuity for the rest of your life. Never pay taxes because you have life insurance. And that's what so few people understand that are really like outside of that high net worth estate, family office regime, is the power of life insurance, just the ability to minimize taxes. And when you put Bitcoin inside a life insurance policy, you get a lot of benefits. Namely, that policy loan is unbelievable. You could be a single guy. You don't have a family. You don't think about life insurance, but you want that tax-free ability, that feature. And that in and of itself sells policy. But let's say you're like me and you have a wife and kids. Well, what else do I get from life insurance? If I die tomorrow in self-custody Bitcoin, what are the chances my wife is going to be able to access my ledger? I've had her open it before with me over her shoulder, but always with me over her shoulder. If I was gone, I'd say, and she's pretty good. She's been with me for a long time. I've been in crypto a long time. I'd say she has a 72% chance of figuring it out, meaning close to a 30% chance that she's not going to be able to. Basically, my Bitcoin will die with me. And that's a lot of money that'll protect my family for a long time to come. And I never want that to happen. That's kept me up at night for years. So the power of having life insurance, having my Bitcoin and life insurance. So when I die unexpectedly, tragically, whatever, it'll go to my wife in a white glove way because we custody at Anchorage, one of the best custodians in the world. And they are going to have a vault for my wife, for Haley, and transfer it over to her in her name for free. So say, I don't know how to use any of this shit in crypto, pardon my language. This is new to me. This is complicated. I had a husband for that. Now I don't anymore. Don't worry, ma'am. You don't have to think about anything. You just reach out to us whenever you want to do anything. If you want to sell, if you want to move it, we got you covered. It's a white glove concierge approach to handling Bitcoin for a widow, for a grieving family. And so you don't have to worry about your safes, your safety deposit boxes, your ledgers, your treasures, your private keys, your passwords, your Google Authenticator, your YubiKeys, all the things that you've used for years to keep your crypto secure. You don't have to worry about any of that transferring to your family. And it's tax-free when you die and it goes to your family. It avoids probate. It's capital gains tax-free. It's income tax-free. It's pretty amazing. So you get the seamless inheritance tax-free element as well. And by the way, she's getting 18 Bitcoin, not 10 that I only bought 10, but she's getting 18 or whatever is left over after my loans, more than I ever bought, which is pretty powerful. And how is she getting more? That leads me to the last point, which is the yield. We're going to grow your Bitcoin at 2% a year. We actually have to grow our portfolio. If we don't grow our portfolio, you give us 10 Bitcoin in premium, and when you die, you get 10 Bitcoin to your beneficiaries. That's custody. Life insurance is guaranteed growth. And so we figured out a risk-free way to grow our Bitcoin at 2% a year, every year in Bitcoin terms, not in dollar terms. So if Bitcoin goes to a million and you're getting the 2% growth rate, so you get 2% Bitcoin growth rate, and then you get 1,000% dollar growth rate on top of that. I mean, the amplifying effect of the dollar appreciation, which in Bitcoin has about a 50% compound annual growth rate over the past 5-10 years, it's pretty powerful. So your family is going to be taken care of. You're going to get yield on your Bitcoin. And there's just a lot of benefits to life insurance. So I figured all this out last year when I got my own policy. And after Hashnote was sold to Circle, I reached out to them. I was like, guys, this is incredible. How does nobody know about this? And here we are. I spoke to you and you were like, dude, this is awesome. And we got to figure out how to do this for Ripple eventually. But for now, we're doing this for Bitcoin.
Well, and there's so many people that need it, right? Like, so there's a ton more people that hold Bitcoin than XRP. I think there's 60 million people here in the US alone that have some allocation to Bitcoin at this point. That's like 1 in 5. And that could be maybe through their ETF. There's a couple different ways that you can get an allocation at this point. But a lot of those people hold direct, and a lot of those people got in early. I know multiple people in my network that are holding a minimum of 10 Bitcoin that just have no clue that this even exists. What type of interest rate are you getting on this loan? I mean, you said you never have to pay it back, but let's say you do want to pay it back. You take that 200.
Yeah. So I love the question. Being opportunistic, there's actually an arbitrage opportunity. So let's say Bitcoin, in that example, Bitcoin goes to $1 million. You take out the loan, you borrow 2 Bitcoin. You're paying 3% interest rate on that loan. Don't forget, your portfolio is growing at 2%. So your net 1%, right? But only 3%. You're not SOFR plus 400 basis points with counterparty and liquidation and margin call risk. None of that. It's 3% in Bitcoin terms that gets netted out of your death benefits. You're not going to get invoiced for it. It just gets netted out of the death benefit as well. You have an option to repay the loan. And here's the how and why one would repay the loan. You borrow money, you sell it, you have a ton of cash. Coin then experiences a bear market of winter. It crashes 87%, or 80% for round numbers. So Bitcoin goes to $200,000. You have a little cash left over. You borrowed 2 Bitcoin, you still have 400K left over. You can say, I can buy 2 Bitcoin for 200K each, 400K total, and pay back this loan. No longer have to pay 3% interest rate and free up loan capacity for myself in the future. So I could play the cycle. So you do that. You sold 2 million, you keep 1.6 million, you use 400K to buy back 2 Bitcoin when Bitcoin crashes, if Bitcoin crashes, and you free up loan capacity for yourself in the future. So next time Bitcoin goes to $2 million, you can borrow 90% of the surrender value, max it out.
And there's no,
and we think,
like,
and you'll never get liquidated because you're borrowing Bitcoin against Bitcoin collateral. And you're not borrowing from an insurance company or a trading desk or a lending desk or a BlockFi or any of those, you have no counterparty risk. You're borrowing from your spouse, your beneficiaries. Your wife is your beneficiary. Like, she thinks she's getting 18 Bitcoin when you die and you borrow 2, she's only getting 16. Sorry, honey. Like, you're borrowing from her, not from a desk. And it's Bitcoin against Bitcoin. So you never have to worry about any type of liquidation and margin call top-up risk.
That's incredible, dude. Like I said, I don't know how more people don't know about this. I'm really glad that you were able to come on here. So you guys use institutional custody there at Anchorage. That's where we custody our clients' assets. So let's say that spouse does receive that Bitcoin. God forbid something happens to somebody. Would they be able to choose an RIA there to help her manage those digital assets?
Absolutely. So you have a policy, you pass, it goes to your spouse. So you could take the Bitcoin. She can withdraw all that Bitcoin into any wallet she chooses. It could be at an RIA at DAG, for example, and say, I don't know what to do with this Bitcoin. It's obviously worth a lot of money. It's tax-free, so it assumes a new cost basis upon death. So you could sell some of it for cash. Yeah, she could sell some of it for cash and say she wants to keep some. So it gets this new cost basis. She sends it over to DAG and has you guys manage it and grow it as well. And it's their Bitcoin. She doesn't have to keep it at Anchorage. She could say, I'd like it at BitGo. I'd like it at Coinbase. I'd like it wherever you want in my ledger. And Anchorage, part of the process will be sending it over to your to wherever you want. Now, there's a really good question in the chat here. Whether you can do this with a trust. Absolutely you can. So there's three parties to life insurance. The way that we've structured it, it's very simple. Three parties. The owner of a policy, that is the person or trust or entity that is going to pay the premiums. Remember, the premiums are always paid over 10 years. The minimum size is 1 Bitcoin, so it'd be 0.1 over 10 years to equal 1 Bitcoin. The maximum we'll do is a 50 Bitcoin death benefit, and that depends on your age and everything to get the ratio. But 25, 30, 40 Bitcoin, depending on your age, can be premiums. So 40 Bitcoin would be 4 Bitcoin a year for 10 years. So the owner, whoever that is paying the premium. Now, if it's in a trust that owns the Bitcoin, then you have to designate a trustee who's going to pay the premium every year. You can optionally pre-fund all of the premium payments as well. Send in all your premium up front, never have to worry about it again. Maybe the owner is very old. We'll only insure single lives between 18 and 65. But if you're an 80-year-old, you're just a baby boomer, someone older than 65, and you have a lot of Bitcoin because you figured it out and you bought a lot early, but you can't get a policy yourself, you can put it in a trust, or you can have your kid or your grandkid be the insured life, which is the second party to a life insurance contract. You have the owner, and then you have the insured life. So one human life between 18 and 65. The younger and healthier you are, the bigger the death benefit is. I think the max death benefit we do is 2.5x the premium. So an 18-year-old healthy non-smoking female is the 2.5x. So 20 Bitcoin in premium would be 50 Bitcoin in death benefit. So for her, that's the max. If you're 64, right on that threshold, 10 Bitcoin in premium might be like 10.5 in death benefit. You're closer to death. We're underwriting your life. That's a risk that we're taking. And so you get a smaller death benefit relative to the premiums. And then the last party to life insurance is the beneficiary. The beneficiary can also be a trust. It can be a charity. It can be a person. It could be your kids, all your grandkids, equal splits. You can have your favorite child 80% and your other child 20%. You do whatever you want. And people do some funky stuff. But ultimately, what we work with are family offices and high net worth individuals. Generally, they'll have a trust, an irrevocable trust for an irrevocable life insurance trust, an ILET. We have the husband-wife duo that did a SLAT, which is a spousal trust that owns their policy. And so there's a lot of different creative ways that you can work with your estate planning, tax lawyer or CPA or accountant to help you structure everything. But yes, the short answer is trust can own and be the beneficiaries of life insurance. But
Would you disclose like how you guys earn the returns on that? Is that proprietary?
No, actually, happy to talk about it. So we are in a very interesting situation being a life insurance company with very long dated liabilities. We're duration seeking. Our liabilities are 40, 50, 60 years.
Right.
So we're seeking duration. We like 5-year, a 5-year bond in Bitcoin terms would be a dream for us. But what we found is this, which has been great so far. Bitcoin miners, they generally have Bitcoin on their balance sheet that they never sold from many years ago at a very low cost basis, that they probably should have sold because in the early days, you would sell Bitcoin to pay for your expenses. You'd pay your salaries, you buy new computers, you pay your rent because your landlord's not accepting Bitcoin. You pay your electricity because Con Ed or FPL or whoever is not accepting Bitcoin. And so you need to sell Bitcoin or get loans of some sort to pay your fixed costs every month, every quarter, every year. And when it comes to, bill paying time, you can either sell today's Bitcoin at $104,000 or you could sell $20,000 Bitcoin from many years ago. But if you sell the $20,000 Bitcoin, it's what's called captive low cost basis Bitcoin. You have to pay a big capital gains tax on that $84,000 of appreciation. And there's a lot of Bitcoin miners that were mining in the hundreds, like $100 Bitcoin, that they should have sold or should have done something with, but never did. And now it's stuck because they can't sell it. They'll borrow against it, but the borrowing terms aren't great. They're like 9, 10, 11, 12, 13%. So what can they do? Well, being a life insurance company, we are in a unique position to offer what we call a repo parity loan, which is essentially a repurchase agreement, a repo, where a miner will lend us 100 Bitcoin and we'll lend them back 100 Bitcoin and they'll pay us 3%. And why would anyone do that? Because they're lending us 100 low cost basis Bitcoin that they wish they sold and didn't. we're lending them back 100 at the money, at the market Bitcoin that they can instantly sell. But they're going to pay us 3%. So really, they're going to send us 100. We're going to send them 97 Bitcoin back. They can instantly sell that 97 Bitcoin, do whatever they want with it. We don't care what they do because we have all 100 of their Bitcoin. We have all their collateral. So this is a fully collateralized secured loan with no counterparty risk, no credit risk, because like I said, we have all 100 Bitcoin. So what do we get out of this? We get 3%. It's actually 3.1% in Bitcoin denominated terms, fixed every year. And at the end of the year, the miner can choose to roll it to a new year by paying us 3.1%, another 3.1 Bitcoin, or they can repay back the 96.9 Bitcoin. We've done some math and we think that there are thousands of Bitcoin across all the miners that we would work with that are what's called captive low cost basis Bitcoin that they can do this with. And so we can get a ton of yield in a risk-free, no counterparty risk way. And the way it then works when we get 3.1% is we give 2% to every policy. That's how we're growing our policies. And we keep the last 110 basis points for ourselves. So that's actually the only way that we make money as a company, because there's no fees or expenses baked into your premiums. Because like I said earlier, with traditional life insurance, you ask for coverage and they tell you how much premium to pay. And there's fees there because they're inflating that number a little bit. We can't do that because you come to us deciding how much premium you want to pay, because Bitcoin's a scarce asset. We can't tell you to pay 15 Bitcoin in premium. You might say I only have 7. Right. So you come to us with premium that you want to pay over 10 years, and we'll give you a coverage or death benefit ratio based off of that, based off your age and health and all that stuff, whoever the insured is. And so there's no fees in the premium. And so the only way we make money is by hitting a hurdle rate, which we call 3% or 3 to 4%. And you get 2% and we keep the rest in a risk-free way. There's no reapplication. There's no, unsecured lending, any of that.
Well, and you're helping the miners too, right? So you're actually the net with long-term and helping them operate at a profitable spot instead of having to pay, 20% or more on their taxes. They just pay the 3% on the interest. And it's denominated in Bitcoin, which they're mining anyway. So we got another question here from Andrew, if you want to tackle that one.
Yeah. Who do you work with for policies and for the loans? So we are the life insurance carrier ourselves. We are a Bermuda-based life insurance carrier. Northwestern Mutual is one of our biggest investors and brought us in our seed round into Bermuda to help us get structured and set up. So policies, loans, everything's in-house. I'm not sure.
So are you seeing name players in those industries who does this in TradFi, are doing it now in digital assets? I mean, this is something that people do for infinite banking. You're basically, you've recreated infinite banking, but for Bitcoin.
Right. That's right.
He says, thanks for the detail, and your fee sounds very fair. In my opinion, the IBC in the digital asset space sounds like you have that in place for Bitcoin. Where can we find out more about it?
Yeah. Feel free to email me to set up a meeting, ask questions. Be happy to get into some detail and really walk through it with everyone, because I know that it's a lot. It's a little complicated. No one's ever heard of Bitcoin life insurance before, and so it takes a little bit of explaining and Q&A. And I'm just working on the FAQ for our website actually, because we get so many of the consistent questions that I may as well just put it all on our website, which will help. But generally speaking, it requires a lot of meetings and walking people through examples and policy models of all time, X age, and this is how much Bitcoin I have. What does this look like? When can I start borrowing? How much, et cetera? And we do that with the potential clients as well. What's your current time frame estimate on offering this program for the main altcoin utility players? So we are Bitcoin only, as I said earlier. It's hard to put a timeline on other coins. I don't think that it would be meanwhile. I think that I'm going to work with Jake and help him set up an XRP life insurer. The only thing is you're going to have to get a regulator like Bermuda to agree to allow for an XRP denominated life insurance company. And if you can do that lobbying, which took us about 2 years for Bitcoin, then
did this take you?
Yeah, it was basically founded in 2022. We got out of their sandbox environment in early last year, 24. So with, by the way, like I said, Northwestern Mutual and other insurance companies are our seed investors and played a huge pivotal role in getting us into Bermuda, meeting all the regulators and the meetings and the licenses and the methodology and the protocol for, but it's doable. Listen, there's 17 million different cryptocurrencies. I think a couple dozen of them are here to stay. So that's 99.99999% of them are going to go to zero. But XRP is here to stay, ETH's here to stay, Bitcoin, Sol, a bunch of others. And so having the tax advantages and legacy planning and estate planning for something like XRP is hugely valuable.
Yeah. Well, like I said, this is primarily going to be Bitcoin people here on this one, and you guys already have that product. Like, and the moat that you have is incredible. If anybody else were to attempt to do this, it's going to take them 2 years of lobbying to get through all the infrastructure.
Right. And even if a huge legacy life insurance company wanted to do this, they would have to spin up a brand new entity denominated fully in Bitcoin. And the reason is because these life insurance companies are dollars. They're fiat companies. And the second that you put Bitcoin into a fiat company, there is an index or a dollarization, and that's taxable.
Right.
And you lose your tax exempt status essentially, or all the tax advantages that you get with life insurance when you dollarize. And that's why our audited financials are a table of numbers with B's in front of them. Because you just got to be in Bitcoin, man. You got to think in Bitcoin. You got to operate in Bitcoin. You got to live in Bitcoin. The price of things gets cheaper in Bitcoin every year. There's no inflation in Bitcoin terms. And so that's how we think. And so people are like, well, Bitcoin's so volatile. What happens if Bitcoin crashes? Nothing. You have one Bitcoin equals one Bitcoin. If Bitcoin crashes in dollar terms, that's a dollar problem. You still get your Bitcoin. And if your death benefit's 18 Bitcoin, then your death benefit is 18.0 Bitcoin, no matter what the price does. And so if you can get into that mentality of thinking in whatever underlying cryptocurrency asset that you want to, you can realize that getting yield that way is really powerful.
Oh. Super innovative the way that you guys have put this together. Definitely nobody else in the market doing anything close to what you guys have structured. Anything you wanted to cover? Anything? Are you looking at other ways to generate returns inside the policy, or is it always just going to be?
So we are definitely looking for all sorts of ways to generate returns. We think that while we obviously, and our regulators and us love risk-free 3%, literally risk-free 3%, 3.1% in Bitcoin denominated terms. I mean, you sort of can't do better than that. There will be staking that works without risking principal. There are probably loans out there that will be very attractive for us with investment grade counterparties. And one of the things that we're working on is I mean, you've probably heard banks are now allowed to touch and crypto assets, like literally can buy and custody themselves Bitcoin. Well, they're obviously going to get into the liquidity game to make two-way markets and spot and then derivatives and do lending.
Sure.
And in order to do all that, let's say you're Morgan Stanley, you're going to need to acquire an inventory of crypto assets, Bitcoin. How do you do that? You can either spend dollars and buy a bunch of it, or you can go and borrow a bunch of Bitcoin. And one of the more creative ways to borrow Bitcoin that we're working on is Morgan Stanley, as an investment grade counterparty, issue a 5-year note, a 5-year bond denominated fully in Bitcoin, meaning that to buy this bond, you have to give up Bitcoin. So we will give you Bitcoin and you pay us yield in Bitcoin, not dollars. And we think that an investment grade counterparty like Morgan Stanley, who would do a 5-year Bitcoin denominated note, the market clearing yield would probably be somewhere between 3.5% paid in Bitcoin terms. And we would buy that bond all day long. We think that's a great coupon to clip with really good counterparties. We wouldn't do it with less than an investment grade issuer, but someone like one of these big banks that are going to start making markets in crypto for their clients that are going to compete with Coinbase essentially and the other big exchanges, they're going to need to acquire inventory, and doing it this way is probably a really cheap. And all they have to do as a bank, if they do this, is be able to make more money, beat 3 or 4%, whatever the yield is. And if they could make 7% in spreads and fees and lending costs, et cetera, and pay out 3%, I mean, that's a risk-free 400 basis points that they're capturing in Bitcoin terms, which would be pretty cool.
Well, and they may be arbitraging the cycle also.
Exactly. And they'll make more money on the downside, by the way.
Right. Yeah, I'm excited to see how this kind of takes hold. We're still early. We don't have full regulation on everything yet. We've got stablecoin bill in. We got the Clarity Act in there. We'll have to see how everything kind of hands out and what things get designated as. But super innovative way to do it. Do we have any other questions? I don't see any.
Yeah, please. Any questions, feel free to type them in. If not, I put my email in the chat to get in touch with me. Happy to. I can call with anyone. And yeah.
Yeah, we're looking at a little bit riskier way to be able to generate returns on BTC or non-yield bearing assets. Other things that don't have native DeFi like Solana or Ethereum. We put it up as collateral, get a margin release against it, and that's traded in market neutral strategies. And that's what we do with XRP currently to be able to generate cash returns for our clients on that asset.
Love it.
So maybe there's some topic of discussion there. Obviously, you guys probably have to underwrite the risk a little bit better and probably wouldn't be able to take as much risk with the asset.
From our perspective, everything is Bitcoin out, Bitcoin in.
Right.
And as long as it's Bitcoin out, Bitcoin in, we'll use an agent or a intermediary where we'll give you Bitcoin. You could do whatever you want with the Bitcoin. And at the end of the day, give us more Bitcoin through whatever strategy you do, as long as we're okay with the risks and the counterparty, et cetera. That's something we're always talking to counterparties about, different asset managers and funds that have the ability to accept Bitcoin for subscriptions and pay out some Bitcoin, not dollars or other cryptos. So if, as long as you're able to take Bitcoin and then give us back more Bitcoin, is the end of every year, we have 100 Bitcoin, we want to turn it into 104 Bitcoin,
Right.
103 or 104 Bitcoin. Whatever happens in between, we are risk averse, conservative life insurance company that has to be around for 50 to 100 years. We have a very, very onerous and strict regulator that's looking over our shoulder at all times to make sure that the risks we're taking are not unnecessary and unwieldy. And as long as they're not, then they let us, go through our process of price discovery and yield discovery.
Before we wrap up, some questions that I just have. So you guys have been around for a while. What's the total amount of policies that you guys have cut? And do you have like a goal as the business development guy to get to a certain threshold or amount in the year?
We are young. We were founded in 2022, but we didn't get out of the sandbox from Bermuda Monetary Authority to last year. So we only have about 75 or so policies. We have hundreds of Bitcoin on balance sheet, not thousands yet. Our goal is to be one of the biggest life insurers in the world. And we think that we can do that because we're denominated in Bitcoin. So by riding the Bitcoin price higher, that'll quickly ascend us into, next tiers of growth, because it's not growing dollars to compete with the biggest life insurers in the world. It's keeping Bitcoin and riding the Bitcoin appreciation cycle, which we think is going to continue to happen over the years. And by the way, there's a chance that the old 4-year cycle is dead.
Fs are in. This cycle is different. I mean, we had it all high before the halving this time, right? So this, whatever you want to say, this time is definitely different than what it's been in the past.
Yeah, it's interesting. I think right now we have this 4-year administration that's extremely pro crypto. Obviously, there's midterms every 2 years, but it could, if you do the history repeats itself pattern recognition and you look for the cycles, then the cycle top is sometime between August and October this year before a 1 year, 80 or so % correction. That's if history repeats itself. Barring, I guess, a war could happen.
What for him to get a policy set up? If somebody, let's say they wanted to take advantage of this and borrow at the top, if August would be the top, like, could you get that done between now and August?
You can get a policy in 5 business days.
Wow.
Everything is online. Everything's automated. You don't have to visit a doctor and submit urine and blood samples to get underwritten. In the US, especially, everything is online. And so being a life insurance carrier, there's a health registry database that is only available to certain medical hospitals and life insurance companies. And all you do when you apply online for a policy is you're going to sign a HIPAA attestation to release your medical records to us, to our internal insurance underwriting team, where our guys can review your records and just make sure you don't have a terminal illness, because we're taking a risk on each person's life. And as long as you don't, then we approve you. We have about a 70% approval rating. And because everything's online, everything's automated, we're a tech company. 5 business days, you can send in your premium payment and have a bound and active policy.
And so let's say, you're a 10 pay. What is the cash value of that policy that you could borrow against after you make what you could probably do last year's payment and then this year's payment in the first 90 or 120 days if you wanted to get in there?
Unfortunately, there is a 2-year AML wait period before you can start borrowing your Bitcoin. So you're not going to be able, we're trying to actually lower that to 1 year, but we did 2 years to these are regulators.
And make sure. Yeah.
But you start borrowing on your second policy anniversary, you borrow up to 90% of the surrender value. So after let's say you do 1 Bitcoin a year, after 2 years, 90% of the surrender value is a percentage of the amount of premiums you paid in, and 90% of that, it's about 1.25 Bitcoin that you'll be able to borrow tax-free on your 2-year policy anniversary. And you can just keep doing that. It's 1.25, then 2, then 2.75, 3.5, 4, 4.75, 6, so on and so forth. Each year it grows 2% a year, every year, plus the premiums you're paying in. Yeah, you can borrow by year 5, you're able to borrow 4 Bitcoin, and by year 10, you can borrow 7 Bitcoin, and it goes, and then it goes much higher after that. And by year 20, if you've only paid in 10, you can start borrowing more than 10 because you've grown more than the amount of premium that you've paid in. So there's no leverage. It's just the compound growth.
And just for people that may not be as familiar with these type of policies and why you structure it the way that you do, you guys use a 10 pay. So it's over a 10-year period. You're adding 1 Bitcoin to the policy. If it was 10 Bitcoins, and you're going to get an 18 Bitcoin death benefit. Like you mentioned, if you're a certain age, right, you'd have to underwrite that and it'd have to be done correctly.
That's right.
But so the sooner, the better. But again, can you explain why you don't want to so you don't want to create a modified endowment contract? And
I was just about to say, the reason it's a 10 pay, it has to be at least a 7 pay paid over 7 years. We did 10 to appease the regulators to make it a non-MEC or non-modified endowment contract. What that means is if you pay all your premium up front and start borrowing after day 1 or year 1, all 10 Bitcoin, 90% of that, the IRS has already figured that one out. And that's a loophole that's been plugged many years ago, and that would be a big taxable event. And they call that a big no-no. So you have to do it slowly over time. 7 years is the minimum threshold. We did it 10 just to be safe. And that makes it a non-taxable event every time you borrow against your policy. So with traditional life insurance, it's up 35%. You don't have to pay the cap gains in that. With Bitcoin, you're borrowing Bitcoin. We're only growing at 2% a year. The truth is the price of Bitcoin might be up 1,000%, but you're only borrowing Bitcoin, not dollars. And you just get a new cost basis that's established on the day you originate that loan as a dollar peg, just in case you want to sell it, is essentially how we view it. But really, you're buying Bitcoin against Bitcoin. We don't think in dollars.
Really, really interesting. So there are some constraints around this. So I just want to be transparent with people, right?
Yeah.
That want to leverage this because it is a very creative and lucrative way to do it, to be able to mitigate taxes and set up your estate, make sure that you're doing everything to, keep your allocation and then grow it over time, but also get some liquidity.
Yeah.
So there are some time constraints here, but if you have a family, if you have a legacy, if your time horizons are longer and you do have the patience and you do plan on holding the asset in perpetuity and leaving it to your family, I think it's the ideal way to do it. So
100%. I think every single person with Bitcoin should have at least some of their Bitcoin in a policy like this, because it'll grow tax-free, you get yield. If you die, it goes to your family, and you get the tax-free policy loans. I mean, from that perspective, if you're comfortable with the meanwhile risk, a lot of your Bitcoin should be in here just so you can never pay taxes when you want to sell it along the way in the future.
So maybe this is another business idea for somebody. If they had Bitcoin outside their policy, let's say that they were going to do 10 Bitcoin into the policy, but they got another 10 Bitcoin. You said that for the first 2 years, they'd be able to borrow 1.25.
After the first 2 years, you'll be able, when you hit that 2-year anniversary, it's about 1.25 is the available loan amount.
So let's say you wanted to borrow against your Bitcoin today. You needed some liquidity for something. You took half that Bitcoin, you got 20 Bitcoin. You're going to put 10 in the policy. You're going to borrow against the other 10. You're going to borrow, 1.5, or maybe it's a lot.
You basically get up to a 60% LTV loan at 400 basis points over the SOFR rate.
Okay.
So you're going to be basically borrowing, maximum 60% LTV at 12% interest rate.
Well, what I was going to say was you could refinance it with your loan against your life insurance policy after that 2 years. So
That's right. You can. That's a good point. When after the 2 years, when you have that loan amount, that Bitcoin being tax-free can be used in very creative ways. And that is a very interesting one you're tapping onto.
An opportunity for somebody that wanted to provide liquidity there.
I like it.
Finance before.
I like where your head's at, Jake. We gotta talk about, pound the pavement on that one.
Yeah. Well, again, I want to be respectful of your time and really do appreciate you taking the hour out to kind of run this down for everybody. We'll get this packaged up and put it together in a way that's really presentable and get it out to the masses. Just want to thank everybody that, joined and asked good questions. And then would you just state your email for people? So if they want to reach out to you guys directly.
Yeah, please. My email is Jason, JASON @meanwhile.bm. Meanwhile is MEANWHILE.bm as in Bermuda. Jason @meanwhile.bm. Feel free to shoot me a note. I'm happy to answer any questions and talk you through exactly what Bitcoin-denominated whole life insurance really is.
Awesome, brother. Thanks again for taking the time. You guys know where to reach him at, and we'll go ahead and end it there.
Thanks for having me.
We got one person with their hand raised. I don't know if I think they just pressed it by accident. Okay. Well, we'll cut it there. We'll get this over to you so you can kind of share it with your network too. And appreciate you taking the time again.
Thanks, man.
Please use the link below to reach out to Jason and his team to work with them to be able to set up your insurance policy for your Bitcoin, to be able to borrow against it and use the infinite banking concept for you and your family.